Ah, silver hasn't been this cheap in 5,000 years of human history. Wow. Wow, Zero Hedge is full of great articles tonight. Holy smokes. Silver hasn't been this cheap in 5,000 years of human history. So, guys, you know what? Silver is a good deal right now. If it's that cheap, guys, it doesn't hurt to own some of the metal. Aquarius sending me some love. Love you too, Aquarius. Solid Exter saying, do a Cinco de Mayo stream, Mike, in the night. It's Tuesday. I'll think about it. Maybe I'll drink some tequila for Cinco de Mayo. I know I have a sombrero. I have a nice mariachi sombrero, a nice one that I bought when I lived in Mexico. Oh, Q. Where's the Q? Where I'm behind here. Where's the Q?
Mexico. I love China.
All right. I'm going to read this one here for Lord Humongous. This is really good. Guys, if you could get your hands on some silver, look at the global money supply just skyrocketing here. Yeah, wow. We're going into severe inflationary territory, okay? And gold is just trying to keep its head above. Yeah, gold should be sitting at $5,200 an ounce. $6,000 realistically. And again, it goes back to what I said about the other recommending books for business. We're not playing by the book.
I love China.
All right, let's get down to this article. Silver hasn't been this cheap in 5,000 years of human history. Okay. More than 4,000 years ago, the city of Kawesh was quickly becoming an important commercial trading hub within the ancient Assyrian Empire. Kanesh was located in the dead center of modern-day Turkey, so it was perfectly situated on a route between the Mediterranean and the Black Sea and between Europe and Asia Minor. As a result, Kanesh became a popular trading post, and merchants, scribes, and moneylenders from all over the Assyrian Empire traveled there to profit from the boom in copper, tin, and textiles. What's extraordinary about this period of history is how many records remain from those day-to-day transactions.
Mexico.
Oh, yeah. So they've on papyrus or on scrolls, they've kept transactions 4,000 years later. The Assyrians borrowed the writing system from ancient Mesopotamia and routinely chiseled their commercial trades on clay cuneiform tablets. Tens of thousands of these tablets have been discovered by modern archaeologists. So we have an incredible amount of detail about ancient financial transactions. For example, one tablet on display at the Met in New York City documents the terms of the loan that originated in Kanesh sometime in the 19th century BC. Holy crap, that's a long time ago. Oh! According to the tablet, an Assyrian merchant named Ashir Edi loaned 3 kilograms of silver to 2 traders with 1/3 of the amount to be repaid in 1 year's time. This is a good article, guys. This was fairly common back then. Gold and silver were both used as a medium of exchange in ancient times, but this was before coins existed. So transactions would be settled based on weight. It makes perfect sense. In ancient Babylonia, for instance, which rose to power after the Assyrian Empire faded. So that actually does get mentioned in the Bible. The cuneiform tablets from that era tell us that the price of barely averaged about 17 grams of silver per 100 quarts. And merchants would use elaborate scales to weigh gold and silver when exchanging their goods. Gold and silver were also exchangeable for each other. Another tablet from ancient Babylonian during the time of Nebuchadnezzar, states that 5 shekels of silver were worth a half a shekel of gold. So you see the ratio there? Yeah, that ratio makes perfect sense. This implies a 10-to-1 ratio between silver and gold. We've discussed this ratio several times. The gold-silver ratio has existed for thousands of years, and up to until the 20th century, it remained within that ancient range between 10 to 20 units of silver per unit of gold. So here it goes. In modern times, gold and silver are no longer used as medium of exchange, but there's still been a long-standing ratio that has persisted for decades. And we brought this up on the show. Even Lord Humongous brought this up on the show. He's brought it up quite a few times, so I'm going to have to mention him on this. 1 ounce of gold has typically been valued at 50 to 80 ounces of silver. Rarely does the ratio go higher or lower. And when it has, prices always corrected. So 50 to 80 ounces. That's a big, huge differentiation.
And yes,
as of this morning, the ratio is 112. Holy smokes. I didn't look at it today, but it's 112, meaning that now it takes 112 ounces of silver to buy 1 ounce of gold. And today's level is spitting distance from the ratios of all-time high of 120, which reached last month. Oh, here we go. We got a graph here giving us the start of World War I, the price of the ratios here. Then we hit the 68 gold crisis. Then we had Vockler. Was that in 81? And then QE2. Gulf War. And when I say all-time high, I mean it. Ancient cuneiform tablets prove that silver has never been so cheap relative to gold. It literally thousands of years of human history. If history is any guide, this means that the ratio should eventually narrow, i.e., the price of silver should rise or the price of gold should fall, bringing the ratio back to a more normal range. And there are plenty of ways to potentially make money from this. The Chicago Mercantile Exchange, for example, offers a financially suited features contract for traders to speculate on gold to silver ratio. Oh man, they have everything on anything, right? In theory, one way to speculate that gold/silver ratio will return to historic norms would be to short gold contracts and go long silver contracts, i.e., speculate that the price of gold will fall while the price of silver will rise. But the question is, would the banksters allow this to happen? That's what no one's asking, right? But personally, there's no chance I would bet against gold right now. I've written for the past several weeks that I approach this entire pandemic from a position of ignorance and uncertainty. Every possible scenario is on the table, and no one could say that for sure what's going to happen next. There are very few things that are clear, but in my view, one thing has become clear is that Western governments will print as much money as it takes to bail everyone out. According to Congressional Budget Office, the U.S. federal government would post a $3.6 trillion deficit this fiscal year due to all the bailouts, plus a Federal Reserve has already printed $2 trillion. Frankly, I think they're just getting started. So this is huge. Huge.
and the answer is...
With this incomprehensible tsunami of government debt and paper money flooding the system, real assets are historically great bet. We've talked about this before. Real assets are things that cannot be engineered by politicians and central banks. Assets like productive land, like obviously you could farm and grow off, well-managed businesses, and yes, precious metals. And they all tend to do very well when central banks print tons of money. Farmland, for example, one of the best performing assets during the stagflation of 1970s, right? Everybody remembers that. And financial data over the past several decades show that whenever they print lots of money, the price of gold tends to increase. Right now, in fact, the price of gold is relatively cheap compared to the current money supply. So here it is, guys. Take a look, take a gander at this. Again, market spoofing, market manipulation. Someone's got to do time for this. Someone's got to be thrown in the slammer for this. So there you go. There's your global money supply, and there's the gold, the price of gold. I wish they created a graph that they could add to this that would show us how much gold is above ground right now and accounted for. Then this way, it could show us the ratio of what the value is, how much is accounted for, and how much the money supply is out there. That would, and a silver, and how much silver is above ground today, to give us a better ratios on, like, what's out there. And then add to the graph. Listen to this. Add how much paper derivatives are out there showing that people own silver on paper but don't have the physicality. And how much paper certificates of gold certificates are out there and don't own the physicality. I would love to see a graph like that. Okay, we got Double A in the house, Mitch Man in the house. Comments are going wild. And the price of silver is ridiculously cheap compared to gold. Again, silver has never been cheaper in 5,000 years. This is why I'd rather just own physical silver. I'm not interested in betting against gold because I expect they'll continue to print money. In fact, I'm happy to buy more gold. And while we cannot be certain about anything, there's a strong case to be made that the price of silver could soar. And to continue learning how to ensure you thrive no matter what happens next in the world, I encourage you to download a free Perfect Plan B guide. So that's on Zero Hedge if you guys want to check it out. But there it is, guys. And then you see the gold to silver ratios right here. And then they break down the global money supply to gold. It would be amazing if we could actually have a way, or if there is a way where we could, I think this would be amazing if there was a way where we could actually know how much gold is above ground and called, that's accounted for, right? That'd be amazing to know. All right, what is Lord Humongous saying here in the comments? The big bank spends $5 trillion suppressing the small silver market. Yeah, I believe it. QE Infinity, MK. You're right. I've been calling it QE Infinity for like, I don't know, like 4 years now on my channel, and the big boys picked that up. Started using that on their channel. Look like the big heroes. Yeah, Layla's got it right. Banks need to go out of business. There you go. Right there. Let's see our good friend here. Here, somebody asked me, who's your role model, Mike? I got some sports role models. This is my role model right here. Andrew Jackson. Right there. Oops. Andrew Jackson. That's my role model right there. Old Hickory. The man who destroyed the banks. The man who freed his country. The man who abolished the corrupt banking system. Because he knew. This guy ain't no idiot. He knew where things were going to go. And he saw it. And he put a stop to it. He spent his entire presidency abolishing the banking system. There it is there. There he is there. On the $20 bill, you'll find him. I think there was... Here he is. There he is. This is a good way... It's a good way to put it right here. Let me see if it lets me open this image completely. Here it is. Let me see if it lets me put it on that side. So you see the banks, all the multiple heads there above my fat head? Hold on, let me bring this over here. You see the tentacles of the banks, the banking system? It's very important that you guys see this, because that's exactly what's happening right now in our banking cartel system. So this is actually a nice set of tentacles here, to be honest with you, because that doesn't look like much. Right now, it's a huge network. It's a huge matrix of layered levels. Everyone's taking a cut somewhere.